Let's go to Phil Streible. He's joining us live from Chicago from Blue Line Futures to walk us through what were the hallmarks of the U.S. session. Phil, good to see you there again. Talk to us about where you think this sort of trepidation is coming through when it comes to equity markets right now.
Well, I mean, if you look at the U.S. equities, we're kind of trapped in this range. I mean, tomorrow we do have quadruple witching. We do have a pandemic. We've got a recession we're dealing with, and the markets are really looking for a reason to make a big move. So tomorrow morning, we're going to have our, stock index futures, the single stock options, stock index options, and also stock index futures all expire. And a lot of times the market does make big gyrations on that. You have to remember that we've seen some of the largest call buying from retail investors over the past few months. They've failed to commit to buying the underlying shares, so they buy the call options for those limited risk strategies. Someone's got to sell them to them. Those are mainly the institutional players. And then to cover themselves, they've been buying the underlying stock. So if you look at the Dow Jones right now, we've got about a 700-point move every single day. The S&P 500, 80 points. The NASDAQ, 250. These are all about $5,000 moves every day. That's not suitable for the average investor, and it definitely does not set up this market to be a bull market despite the move that we've seen.
Okay, so we'll be keeping our eye on those options expiries. What do you make of the fact that volume is, relatively low? I think it was down about 20% yesterday and likewise today.
That's one of the biggest underlying factors. You're not able to attract the average investor into these types of moves. The technology sector has completely blown through the roof. We've got the NASDAQ at an all-time high. People don't want to chase those markets up there. They don't want to be buying Zoom and Netflix and Apple and Microsoft all near these contracted all-time highs. And they surely don't want to be trying to bottom pick by buying the cruise lines and the individual hotels and airlines. It just sets for, a disaster. So you've got these value investors that normally, you have traders that were trading the volatility that all of a sudden have bad positions in their accounts, and they've turned themselves into these value investors, and they've got, it's just bad positions, and it's you got to have to wait this thing out. And you got to be patient if you're going to get in there and get good investments at good values.
Yeah, I don't know if patience is what these so-called new investors, Robinhood investors, are really that interested in. But we'll leave that one there because, we've got the Fed pumping massive stimulus. We had this week, the announcement that it would be moving into the corporate bond buying program. And stubbornly, I suppose, it hasn't had a lot of impact right now on the U.S. dollar. We saw the U.S. dollar index up by 0.3% through the overnight period. But do you think that relative strength is here to stay?
Well, the Federal Reserve is intentionally trying to devalue the dollar as much as possible. What it does is it pumps up all assets that are out there. So broad-based commodities as a whole should start to rise. Just pick any commodity out there like U.S. soybeans. When the dollar index sells off, other competitors out there like the Brazilian real, that lifts up. China, a major importer of soybeans, needs to pick and choose, and all of a sudden U.S. soybeans look like a cheaper buy to them. So the Federal Reserve is trying to pump our economy a second way, and it's by devaluing the dollar.
Okay, so where are you putting your money? Where are you putting your smart money, Phil?
Well, I still think that metals across the board are going to gradually rise. The problem is right now is that, we're trapped in this range in the gold market. Silver is most likely going to break down in the 200-day moving average. So you're going to get a lot of good plays out there. Look at copper. Copper futures continue to grind higher, and it's a reflection that China and a lot of their industrial demand, their industrial production are all slowly starting to creep higher. I think, though, you avoid U.S. equities at this point.
Okay, Phil, it's been great to have you on. Have a wonderful Thursday evening, summertime in the Northern Hemisphere, and a great weekend when it comes.
Thank you.
Phil Streible there joining us from Blue Line Futures in Chicago.